G'day guys, this is Dan. Welcome to the Signature Series video 7, and there will be a video 8. So today I'm just going to go over this trade model, the intraday trade model, and talk a little bit about it. And I will be definitely talking some more about it and pointing out quite a few things within this model within video 8 also. So just a rundown of the model. The solid vertical black line is 2 p.m. New York. The blue line is the close level, 2 p.m. close, New York time. The shaded box above and below the blue line is 20 pips, and the shaded box is like a measuring device. It's like when we look at correlated pairs, I like to look at how far price is moving up or down against the 20 pip boxes. So it's 20 pips from the blue line to the black line, blue line to the black line. So they're not there to say, right, this is where you sell and this is where you buy. It's just a measuring tool, and you will see some of that as we move forward. The vertical lines, dotted lines, each are 1 hour each. Now, because I live in Australia, I like to look at setups from Asia through London to the New York Open. So for me, there's 3 critical hours, and I'll point that out now. If you look at the bottom of the screen, you'll see each hour is numbered 1 to 24. Now I like 7, 11, and 17. Now of course you won't see this happen all the time, but this is just an example of what I'm getting at here. So the 3 critical hours for me are the Sydney Open, number 7, Midnight New York, number 11, and 17, the New York Open, basically 6 a.m. New York. Of course, you will see trades set up in between these time frames. The beginning of this particular zone, trading zone, kill zone, whatever you want to call it, for me, start at number 7, and in segments start at 11 and 17. Also, I forgot to mention the inside grey area is the 1 hour price engine. So the lighter grey shade is the inside or the prior hour to the seek and destroy type hour. So when identifying a trade, a possible trade setup, I like to see a confluence of the models. So if I'm on the intraday chart here, as I am, and I'm looking at either a low formation or a high, then I'm also looking to the daily model and the weekly model. And as an example, yesterday, with price being extended above this particular high here, the Asia high, right? As price reaches up above that high, then this sweeping motion of the 1 hour price engine, the fact that they swept the low and the high and the Asia high, at this point in time, does that signal a possible sell-off? Is that a stop rate? So what's the next thing we can do? We can look at the daily model. And this particular instrument is pound New Zealand dollar. Okay, so here we have identified an inside day prior to the outside. Now, just to note, Larry Williams, he calls inside days a day that is like this particular, just getting off track here for a second, he calls this formation an inside day. He's possibly not the only one, but the fact that price didn't break the previous day's high or low then can also be identified as an inside day, though I talk about it as this day, the previous day being the inside day. So knowing that we have that price formation, this particular day that formed the high broke the previous day's high in a bearish market with a bearish tone, is the intraday setup here. Now let's look at that. Let's look at the inside outside day on this particular chart. And I'm just going to zoom out. Okay, so I've implemented the inside outside day on the intraday model. So looking back up here, yesterday's high, yes, we can see price during midnight New York, at the beginning of midnight New York, and after, we can see price use that intraday price engine and they rallied price up from this point in time at this support level to meet the high, to meet the previous day's highs and take out the stops resting above Asia. And as they sold it off, they also found a low during the New York Open, or the drop down in price after 6 a.m. New York, to get back up to a better price before they really sold it off. And if you have a look at the resting liquidity there, this is a clear signal. These two highs here, this high and this high, formed a liquidity pool. So this particular level, these highs were engineered in a way where they were going to run it, take out the liquidity pool, any resting orders and or stops, and then resume the sell-off back down to this price objective of the inside day's low. And you can see they slammed that and then it bounced. So many times, every day, every week, you'll see price use these areas, and they'll set up nice trades around the inside outside days. So what you have here is you know when you're possibly looking for a trade setup, and that is either immediately after an outside day or well after an outside day when price resumes back into these areas. For example, just looking at this particular day here, these 2 days here, using that outside day's high as support there. And the beauty of these models is, especially in the intraday, you can use pairs against, like correlated pairs against each other, to identify that divergence as well. So just for an example, looking at pound Aussie and pound New Zealand, these 2 pairs are also somewhat correlated. So you will see price setups, trade setups around, not just from the inside day, outside day, and the intraday model. I'll just show you an example here of cable. Noting this liquidity pool here, time of day, midnight New York. You can clearly see, even just looking where the red arrow is, on this particular Monday, which is the 1st of July, cable was somewhat higher, using the 2 p.m. CME New York close. You can see that cable was somewhat overbought compared to fiber. Now, if you put the intraday, you can see here, as I have it on this particular total intraday averages, is what I'm trying to say. Commonly, Mondays can be bearish. Now, that's not going to happen all the time, though. Like I said, when the models come together, this is one more tool that can assist you in your trade ideas. So the more things that come together, the better decisions you will make. So if there's nothing behind the trade at all that you want to make, then don't make it. Okay, so just looking at Euro Yen and Pound Yen here as 2 correlated pairs. Look at this big swing up that Euro Yen made, fairly close to the 20 pip high, during a time was just before 6 a.m. New York. So we'll just highlight that. This is 6 a.m. to 7 a.m. New York, right? This particular high was made. Now, as I said, what else can we find to confirm this is a trade setup for a short? The fact that price swept the outside hour low and high is a good way to look at price action. And very early in my days of studying price action, one of the first things I noticed was, why does price make these triangle shapes and then move away from them and or come back to them and use those areas again? Well, now we know. So let's look at the daily charts for Euro Yen and Pound Yen. So on the 2nd of July, this particular day here, for pound yen, we know that the previous day, the 1st of July, pound yen moved back up into the somewhat fair value area of the inside day. So this order block was used. The move up prior to the move down, the rally up into that fair value area. So price is possibly going to come into some distribution. So it was the intraday charts, and you can also see clearly over here on Euro Yen that they rated this outside day and quickly reversed. So once again, Euro Yen was looking to move back into the inside area, the inside day zone, because they hadn't been there yet. They wanted to get back there. So the intraday charts were also confirming that price could become heavy. So we have got here in the blue shaded area 6 a.m. New York, and you can see that little rally the pound yen made there from that particular area. And also Euro Yen. Now there's some SMT divergence that you probably could not see until I drew the lines then. And just from that using that particular area, this particular rally against Euro Yen, even if you take the top you take the high of this particular hour, 6 a.m., and draw that to the next high, you'll see that just using each hour as an hour block, you'll see that's SMT divergence right there. Now there's little things like this that you start to see in different ways though. Not everything's going to be exactly the same. And you will see some more examples as we move forward. So now that you know these models, my future videos will mostly be around these models and identifying good trade opportunities. I'm not to say I'm going to provide a signal service, though I can show you guys, and that's what I'm here for, is to show you guys how to set up in a way that you can start to study price and understand it more before actually diving in and with the hands-on experience. Now just a quick example of using the 20 pip range as a tool to measure price. Just an example here using Aussie yen and New Zealand yen. You can see how Aussie yen breached that 20 pip high, whereas New Zealand yen did not. So just using that particular high displays SMT divergence there. And once again, you're looking at time of day and also the higher time frame models, the daily and the weekly. So as it is, just looking at that time and price, midnight New York, number 11, 7, 11 and 17. Now I guess you guys are probably going to ask me, what about these indicators, can we get our hands on them? Well, this particular indicator I'll talk to my programmer about, and definitely if I can release any of these indicators, you will receive them via email with possibly a few instructions. So we'll just see how we go with that. So this video is basically just about this particular model mostly, and like I said, we'll definitely go into more examples and I'll talk more about price action around it all. So with that, guys, I'll see you on video 8. Take it easy.